Nobody likes being told what to do. So today we're going to give you 6 reasons not to do infinite banking. So stick around.
Enjoy the episode.
Enjoy it more. If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And like we said earlier, today we're going to be giving you 6 reasons not to do infinite banking. These are going to be good. Well, at least mine are going to be good. Faso, I think yours are going to be
great.
Yours are going to be mediocre. So
mine are going to be more good.
More good, more better.
More good.
Awesome. Hey man, how was it in preparation for this episode?
Oh, Ted, to be honest, this was difficult.
I heard you crying across the hall in preparation.
It wasn't quite crying, just maybe a little whimper, but
it was. There were tears.
I don't know. It sounded like a good topic. And then when I went down to like, all right, what are some reasons why you should not do infinite banking? I had a really hard time with it. Like, I'm sure there's some easy layup ones, which are probably the ones that you're going to give. So I'm thinking, why shouldn't people? And I think part of the reason why I had difficulty, I mean, for one, all honesty, I'm a little biased. Okay. But to be honest, I feel like we have beaten up this thing. Like, we've gone deep in the numbers. We have a lot of experience in that, me just a tad bit more than you, but we have seen it work. I mean, Infinite banking works. The only reason it won't work is if you don't work it, right? If you still the P's, meaning you take a policy loan and you don't pay it back, or you don't pay premiums. Outside of those two, infinite banking is going to work. So I had a difficult time coming up with this, but I do have a few reasons. So.
Okay. I was going to say, well, it sounds like we should be done here.
Well, no, to be honest, what I thought, I'm like, hey, during this time I blocked out, why don't I spend this time making fun of Cameron or some things that I could add in the podcast? Okay. Fortunately for you, I didn't quite do that, but I did have, say, some more sarcastic reasons why not.
That would be hilarious if one time you just showed up with 6 jokes about me that have 0 to do with the topic. I would certainly be entertained.
Well, How about you coming up with this?
Very similar. I had 2 that came to me right away. And then, to be honest, as we go through this, the other few that I share are probably more of an exception to really the rule. And so they're good. Don't get me wrong. They're great. They're really good points, but we're going to be sharing them with you guys. So you guys are going to get almost a dozen, really. 6 from you, 6 from me. So 12 reasons.
Hold on.
Wait.
You even said at the beginning, this is 6 reasons not to do infinite banking. Yeah. Then if we're splitting it up, I'm thinking I know you're not a CPA, right? Very clear you are not a CPA, but 6 plus 6 equals 12.
That is true. So how many do you have?
In my normal fashion, if I'm supposed to do 3, I always do a little bit more.
Oh, geez. So, all right. Okay. All right.
Why don't you bless us with your first reason?
Absolutely. Look forward to blessing you with this knowledge. First reason is, if you don't want to plan for the long term, don't do IBC. And what I mean by that is, I have told people many times over the years that if your focus is short term, meaning if you're looking over the next 3 years or so, you're going to be better off operating on a cash basis. And additionally, I actually coined a phrase.
You coined it?
I did.
What I love is you already says it's coined before you even said it.
Well, I did, because I was thinking about it. To be honest, I doubt I coined it. I'm sure I heard it from somewhere. But we talk about our slow start all the time. And I'm going to add slow start, but a fast finish. Right? So anytime I hear someone say there's a slow start to infinite banking, again, we've always got to view 2 sides of the coin. Is there's a slow start but there's also a fast finish. And I don't think we pay enough attention to that. I think we beat home the slow start oftentimes.
Mm-hmm.
And so that's going to be my new catchphrase. I'm going to make shirts, make it a tattoo. It says slow start, fast finish on it. So if you guys are focused in the short term, don't do IBC.
Okay. A couple comments on that.
Mm-hmm.
I really like that phrase because to be honest, I was thinking we call it slow start and I wanted something to contradict it. And I could get start and then I can get finish. Right. But I don't know. The
slow
fast
and the fast was a little beyond you. I understand.
No, I would say beyond me. I didn't think it was that worthy enough, but as you're saying it and you already coined it, like I dig it. Like we do need something.
That's I don't know. Yeah. I don't know if that was a subtle compliment or are you insinuating that you had already come up with it?
No.
Oh, okay.
No, I just don't. Maybe I did, but just don't use it. But would you expect anything less from me, Cameron?
Let's go. Okay.
What I also like what you said was when you started with is if you don't want to plan for the future. To be honest, there's a lot of people that do not want to plan for the future.
Yeah.
And they just live for today. And those will be the people working at Walmart, being at the help desk, because they didn't plan for the future. My first one was very similar. I said you should not do infinite banking if you're short-term focused.
Okay.
But now again, that slow start, I would say, is by far the biggest obstacle.
Yeah.
And infinite banking is a long-term strategy. So what I tell my clients, there may be a slow start, but there's a strong finish. Okay. No, I just came out. I'm just teasing. I have been looking.
I was like, that's genius.
I've been looking for
that.
Is genius. Yeah. But a couple things, and again, we have more experience with it, so it's easier for us to accept this slow start. But one thing I think is interesting, people put $1 in their 401k.
That's
right.
Great point. Yeah.
If they need to take it out for an emergency, maybe it's an emergency or maybe an opportunity. Maybe they want to buy a rental property or create passive income. Okay. But they put that $1 in. Cameron, I'm going to have you do a little math. So just be prepared. Okay. But
write this down.
Let's say somebody puts in $1.
Yep.
They're in the 20% tax bracket.
Yep.
There's also a 10% penalty. So I'm helping you out.
Yeah.
So they put in $1. How much will they have left of that $1?
50 cents. I'm just kidding. 70.
70 cents.
70
right?
cents. Yeah.
You know what's kind of interesting? Typically, again, the designs are very different. But oftentimes, wouldn't you say those first year you put in $1 and you have about 70 cents?
Absolutely. Yeah.
Okay. But here's the difference. Year 2, you put $1 in your 401k. How much can you pull out?
70.
Right. And you can do that every year. Mm-hmm. So by year 10, you put in $1 and you're pulling out how much?
70.
Okay. Infinite banking is very different. All right. That first year, maybe we're the same. Sometimes maybe the second. But that third year and every year after that, the loss of liquidity is minimized till eventually it's going to be maximized, where you're putting in $1 and maybe in year 10, you're putting in $1, you're getting $1.50.
Yeah.
So what I think is interesting, that slow start, they're having that in the 401k. They just don't realize it. But we also need to account for, we're like starting a business. Like Nelson had said, everyone's in 2 businesses. Well, the one they make their main income from and the banking business. Just a lot of people don't realize they're in both. But we're starting to bank, we're starting the business. There's going to be a little slow start. Or even when you go to college, you're investing in yourself. You're not making any money in your career those first couple of years, right? But that you take that slow start to have that fast finish. And we just need people, I think, if they can just be a little more open-minded, well, here I am. I'm telling the reason why they shouldn't and turn around and telling them why they should. But I am trying to be genuine, but I just have so much passion for this. So anyways, man, that was a pretty exciting number 1. Right? Or at least passionate, or at least on me.
Yeah, that was a good number 1. It sounds like we both had it just stated a little bit different.
Look at my
Mine was definitely more eloquent.
Don't look at my notes.
All right, moving on. Number 2. You want to go? We want to be two.
No, you go, because I think
Okay.
you got a little more than me.
All right. If you don't want control of your finances, don't do infinite banking. The reason I say that is because we will get phone calls, right, of people that will listen to the podcast and they'll call in. And very few times has this happened, but we use these phone calls to be totally honest and upfront with somebody, and we'll ask them what they're trying to achieve. And at the end of the call, we'll give them our honest opinion and say, hey, I think Infinite Bank is a good fit for you, or it's not. There have been times over the years when I've told people, hey, to be honest, I don't think it's a good fit for you. And the handful of times that has come up, almost exclusively, it's really been somebody that has said, hey, I don't really want to be involved in my finances. I don't know how this is going to go for me. I don't want really any involvement whatsoever. And so I'll tell them, hey, I don't think infinite banking's for you. I think you should probably stick with the more traditional path.
Well said, Cam.
Thanks. Fasto, what do you got? You're number two.
Well, you're saying that I did wanted to add something to my number one. Okay. And but you know what? Sometimes people need to be short-term focused. Yeah. For example, let's say you just started a business. Well, you know what? That business is going to need all that capital. So it might be better for you to focus on building that business and then focusing on infinite banking. Okay, so just a little.
Oh, well, I'm gonna add to that.
Yeah, add to it.
Because I had an example just recently is you'd said starting a business. Oftentimes somebody's in debt, right? Oftentimes I just had a client came in, they had some debt and they wanted to do infinite banking. And to be honest, we could have put them into some policies and kind of walked away. But after looking at their situation, the debt was priority number one. And so my suggestion was, hey, let's go pay off the debt. Let's get into a place where we've got positive cash flow, and then we can consider infinite banking.
Well, ironically, I was thinking about that individual when I came up with it, but I'm trying to focus more on investors. But dude, you're gonna get a compliment, and then
how about we focus on your number two?
Okay, my number two is you should not do infinite banking if you do not want to invest in yourself.
Good point.
To learn this process, really, for you to get a policy, you're going to be on one discovery call with us, probably 4 to 5 meetings, just to get the policy in place, right? And then this also takes a different way of thinking. We are learning something new. To be honest, kind of like we alluded to on that first one, when we're not focused for the future. A lot of times we're not in a mental position where we don't want to take that time and to invest in ourselves. And infinite banking does add another level of effort. I think it's more than worth it, but I feel a lot of times people are just so kind of like what you'd mentioned, you don't want to have control of your money, where we're just delegating the money to somebody else. And we, for some reason, have felt comfortable trusting others. But so if you're don't want to invest in yourself and aren't willing to add an extra effort, then you should not be doing infinite banking.
Well said.
What's your number 3, Cam?
My number 3, this one was doesn't happen often, but I thought it's worth sharing here, is if you don't qualify health-wise, meaning if you cannot get a policy on yourself and there's no family member, business partner, someone with insurable interest around you, if we can't find anybody to insure, infinite banking's not for you, unfortunately, because the foundation of it is that whole life policy. And so haven't had this happen a lot, but I have had it happen recently where I had a lady came in and unfortunately a lot of her family members have since passed and she was not insurable. And so, man, it's just an unfortunate situation where, man, it's not a good fit for her.
Well, you're right. That is a good point. And it is rare that somebody doesn't qualify, but it does happen. But also realize a lot of times I think people think they aren't going to qualify when they really are, because maybe the cholesterol is high and they're on blood pressure medicine. If things are managed by a doctor, typically we can get an approval. Maybe it's not the highest, but it's possible for us to get one. But when we're unable to, what I tell people, you can become your own banker without using whole life insurance. We got to use a product. We got to store our money somewhere. Whole life is the best product by far to hold that capital. But if you can't get a whole life, then there's ways to use CDs or other assets. And the important thing is you're leveraging against them and paying it back.
Well said. That's enlighten us with your number 3. Probably your last point. I'm only halfway through.
You should not do infinite banking if you have low self-discipline. With infinite banking, there's no third party saying, or, hey, you need to pay your interest, or there's no consequence where your credit will be dinged for late payments, or if you're not fulfilling the repayments. This is really, it's really up to you. And I think I'm sure I've shared this on the podcast. When I first got a policy, I quickly took a loan and paid off my car note. But what I didn't do was I should have redirected the payment that was going to Ford Credit, should have reallocated that back to my policy, and I didn't. And in part because nobody forced me to. But then eventually I came to the realization that I'm only stealing it from myself, and I needed to do that. But also, that's why it's important that you're working with a good IBC coach. That can be your third party to be like, hey, Cameron, you need to pay the interest, or what are you doing? I mean, we need to have some sort of accountability. What's your number 4?
Number 4 is you should not do infinite banking if you don't want to put in the work. Very similar to one you had earlier, but I'm going to add a couple things to it. Is no one is going to do it for you. And so oftentimes when I'm talking to people is they're not where they want to be financially. And it usually comes down to 2 reasons, to be totally honest. One is we don't know how to get there, or 2, if we do know how to get there, we're not taking action. And so both of those require work and effort. One is if we don't know how to get there, we need to go learn it, right? Go find a mentor, go put in the work to get educated on whatever niche or area we want to specialize in. And then the other one is if we do know it and we're just not taking action, man, we got to take that first step. Let's just make it a real small one so that we get moving, and then we can take bigger steps as we progress forward. But oftentimes, if you're not willing to put in the work, infinite banking is not for you.
Well said, Cameron.
Thanks.
Another reason why you should not do infinite banking is if you have more month than you have money, meaning we're living above our means, and we end up we end up spending more money than we have and getting in credit card debt. If you haven't developed that savings habit and being able to put some money aside without getting into debt, infinite banking is not for you. You need to get out of that bad debt, just like you had mentioned earlier. But if you're in that situation, it's a little difficult. You don't have the money, but you want to make more. And, one way is either we cut expenses, which kind of sucks, right? As far as enjoying life, or we need to make more money. Easier said than done. However, it's not as hard as what most people think. If you go back to look at some of our podcasts, there's a lot of opportunities for you to make money without using your own money. A couple that I think about is one we had recently about the creative financing with Zach Beach, and then also the art of the slow flip. If you could, there's a lot of people out there that have the time and idea, but they don't have money. And then there's a lot of people who have money, but they don't have time and the idea. So you guys can merge together and can create a great partnership. So I want to reiterate, you don't need to have a lot of capital to build wealth, but you do need to have that will and the ability to take action.
Well said. Well said.
What's your number, Finsky?
Number 5. Don't do infinite banking if you don't want to become successful. Right? This was a hard lesson for me to learn over the years, especially early on in my career, to be honest with you guys, is because I would meet with somebody and we've got a solution to most of their financial
Mhm.
problems, right? To a lot of them. But I'm often reminded of scripture that's in Nelson's book, right? And I think it's John 5:6, where Jesus comes up on a man that's been ill for a long time. And the question he asks him is, do you want to get well? I can ask people the same question financially: is you're in this situation, do you want to get out of it? And to be totally honest with you guys, is there's a large population of people that at the end of the day will say no. And so again, right, there's people that are afraid of success, and they will not take steps to get themselves out of the situation that they're in. And so, right, unfortunately, that is the reality.
No, and that reminds me of a great book called The Millionaire Mindset. And he talks about the difference, how wealthy people and poor people view things. And he had a great chapter in there that mentally we have a comfort level of us making a certain amount of money. And when we start to make more than that, we do feel uncomfortable, and we have a tendency to make decisions to kind of bring us back down. And that hit home to me. And interesting, I was just sharing this with my son the other day. When I was in college, I finally had like a good paying job. I also had the GI Bill, stayed in state, so I didn't have that many expenses. First time that I actually had more money than month. And you know what? It did feel uncomfortable. So you know what I did?
Spent it.
I bought a car. I got a car payment, and like, okay, all right, I feel more comfortable just barely living on the edge. And if that speaks to you, I would encourage you to work on that and start by reading the Millionaire Mindset.
Great point. Thanks for adding that. Anthony, what do you got? Do you have any more? Or are you all
Of course,
tapped out?
I always got more. Okay. This is part of going to more of my kind of speed, sarcastic ones, but you should not do infinite banking if you like the following things. If you like paying taxes, if you respect financial entertainers, you should not do infinite banking if you like being average, or if you like renting, or if you like trusting others with your retirement. And do you have another one? Well, I'm just going to keep going.
Please do.
But you should not do infinite banking if you don't like these things. If you don't, I'm sorry, it sounded a lot better when I was writing it. This is going to be a little harsh. You should not do infinite banking if you don't like your family. If you don't like protecting assets, you don't like having more money, if you don't like making passive income, you don't like learning new things, and you don't like real assets.
If you don't like your family.
That's
yeah.
I mean,
hey,
you know, it's interesting. I've seen a few people that really don't want that death benefit.
So do I.
And
so have I. Yep.
Yeah. Cameron, what's your last words of wisdom?
Yep. My last words of wisdom are: if you don't want different results than everybody else, don't do infinite banking. If you are more than happy to get by with the status quo and you're satisfied with that, then continue to do what you're doing. Average people are going to get average results. If you want different results, you've got to do something different.
You know what? That's well said. That's a very important piece. And I think that's a great way to kind of end it, of one of the last things. Or do you have more?
No, but I got many more, but that's a good point.
Yeah. Well, if you have something good, let's
not. No, that was it. That was my last point. Right.
Dude, there's nothing on this page, man.
That was my last point, was just saying that, right, there's a lot of people out there that are more than happy to just go and do the traditional path, and that's their expectation. But, man, you know what? A lot of our clients, a lot of our people want something more. They know there's something more out there for them, and they've been searching and looking. And, guys, if you've not started or taken a look at infinite banking, do yourself a favor. Take a look at it. See if it's a good fit for you, because we don't get average results around here.
And if you want to learn more, hop on a discovery call with Cameron and I, and we can answer your questions and really see if infinite banking's for you. Link will be in the notes. Go make it a fantastic day.
Take care.
If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.